Hi everyone, it's Brett here from Metropole, and today we're talking about shares and property. But it's probably not what you think. So before all you investment analysts and share traders and keyboard warriors start beating me up, look, to be honest, I think both asset classes have performed relatively the same over a long period of time, and I think they probably will moving forward as well. Yes, there's little intricacies and differences within the market, but I'm not here to say one class is better than the other, and in fact, I think you should diversify. Well, what I'm going to talk about is the ability to build a portfolio and create wealth from the beginning. And I think property has the edge here. I believe property has the edge for two reasons. Number one, you can actually leverage property. You can leverage your assets into using other people's money to grow your asset base faster. So for instance, if you've got $100,000, you could leverage probably anywhere into 500,000 to a million into property. Whereas shares, you're probably lucky to be leveraging into about half that amount. You're probably more around the 50% mark, whereas, property, as I said, a 10 or 20% deposit is going to get you more. So even if shares do perform, a couple of percentage points better over the longer term, because you've been able to leverage your asset base and leverage your money into a much bigger portion over a considerable time frame, it's going to compound and create much, much more wealth and get you into better investment grade assets. The second thing I believe that gives property the edge is the ability to add value. Unfortunately, it's very difficult to add value to your share portfolio, but it's quite simple to do so in property. You could undertake a simple cosmetic renovation. You could do something more structural. Or for the more sophisticated investor, you could look at doing a development. And that's going to add a considerable amount to your asset base. It's going to increase your cash flow, and that compounding is going to have a much greater effect than it would in your share portfolio. So that's my thoughts, guys. Many people get into the property versus shares argument. At the end of the day, they've performed the same. They're probably going to perform the same moving forward. But I think to build an asset base, you're going to have a few tricks up your sleeve, and I think property is the way to go. Thanks again.